Stop kidding yourself if you think long-short equity is some magic wand that beats the market every single time. That's a lie the industry sells to keep the dream alive, but you already know the cracks hidden beneath the polish. You felt the frustration when your carefully built thesis collapses overnight, when short positions blow up in your face, or when long bets just limp along, barely keeping pace with inflation. It's infuriating. You put in the work, sweat the details, stress test every scenario, and the market still spits in your face like it owes you nothing. Here's the blunt truth. No one, no strategy, no hedge fund, no matter how shiny their pitch deck, beats the market all the time. Long short equity is powerful, yes, but it's a weapon, not a promise. What you're missing, and what most people refuse to admit, is that success here depends on ruthless discipline, relentless self-awareness, and brutal honesty with your edge. If you're chasing absolute certainty, or thinking you'll dodge every bullet, you're already dead in the water. Now, if you want this to work, you need to stop being comfortable with just the obvious setups. Long positions have to be airtight, but more importantly, your short positions must be surgical, almost cruel. Understand the incentives driving the market's biggest players. Dissect where the herd is making the same mistake, and place your bets there, but only when your edge is so clear it's almost absurd. That means not just brute force numbers, but psychological insight. Why does this stock still trade overpriced despite all the bad news? Who's holding it and why? What debt or structural risk lies hidden behind the headlines? Don't let diversification lull you into complacency. Hedge funds that dummy-proof with a handful of longs and shorts miss the whole damn point. Your shorts need to be your alpha. The real skill is managing risk in shorts that could look wrong for months and turning patience into profit. You're not aiming to win small every day. You're willing to take calculated pain because that's how you crush the market in the long run. If you aren't ready to sit through the gut punches and reevaluate your positions without ego, stay out of the game. And listen carefully. Data is your foundation, but data without context is poison. If your model spits out trades without you actively wrestling with market narrative, you're in deep trouble. The best long-short players blend quantitative rigor with real-time, gritty market understanding. They know where things are breaking, where institutions are trapped, and why sentiment will flip faster than your algorithm can update. One last thing, stop believing that what worked last quarter will work tomorrow. Market dynamics shift faster than you can blink. The real edge is adaptability. If your fund doesn't pivot, doesn't challenge its own assumptions daily, you're dead on arrival. That means ruthless postmortems, transparent mistakes, and a culture that rewards brutal feedback, not ego stroking. You want to beat the market with long-short equity? Then go all in on mastering the short side like a predator, know your longs better than anyone else, sweat the micro risks that no one else sees, and build a team wired for brutal honesty and swift action. There's no room here for half measures, wishful thinking, or ego-driven trades. It's a grind. It's messy. But when mastered, it's one of the few strategies that can shift the odds in your favor, not by luck, but by cold, relentless skill. That's power. That's what you need to lock in if you want to stop losing sleep over your positions and actually own the game. Subscribe to our YouTube channel and open the featured link to learn more.